Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that has been hitting the news pretty heavy recently, and that stock is ConocoPhillips. And we can see that over the last year, this company's stock is outperforming the market. They're down around 1%, while the rest of the market is down around 10%. And very recently, some pretty interesting news came out about ConocoPhillips, so I'm going to be looking into that as well as their financial statements. And then I'm going to be looking at a discounted cash flow model to figure out the intrinsic value per share of ConocoPhillips so we can know if this is a good price to buy into the stock from a value investing perspective. And so right here, you can see exactly what I was talking about. President Biden approved ConocoPhillips' Willow project to drill oil in the Alaskan Arctic. And we can see it's a pretty cool photo of that right here. And basically, the Willow project was something that was proposed 5 years ago by ConocoPhillips, and it would be the largest oil development to proceed under the Biden administration. It'll basically contribute to over 30 years of production. It would pump about 576 million barrels of oil from the federally managed reserve on Alaska's North Slope. And we can see they point out that 30 miles west, there's a village of 500 residents and birds and local wildlife that depend on this area's ecosystem. So the Willow project might end up having some negative impacts on those people and those animals. And some people were very skeptical, or they weren't really in support of this proposition. Some people were saying that they couldn't allow ConocoPhillips to accelerate the climate crisis, and that the Willow project contributed to that. But in particular, something I found very interesting here was that the invasion of Ukraine by Russia ended up complicating the decision. Obviously, there were some sides of the debate who thought we shouldn't do this because it's bad for the environment. And there were others, like in this paragraph right here, who thought that because of the embargoes on Russian oil and gas, those sent energy prices soaring last year. And so Biden and other officials basically started appealing to U.S. oil companies to increase domestic production in the United States. And so oil executives gathered for a major industry conference in Houston, and they argued that rejecting the Willow project would be hypocritical because it's exactly what Biden and the officials asked for. They asked the industry to produce more oil domestically, and so that's exactly what they're doing. And so to basically go against that would be hypocritical for the Biden administration. But on top of that, we saw right here that one of their main goals was to reach net zero emissions by 2050, but the Willow project, as planned, would continue to pump beyond that date. So there are a lot of moving parts to this decision. There are some people who are against it because it's bad for the environment. Some people who are for it, like if I scroll down here, some people who pointed out that other countries, if the United States didn't domestically increase their oil production, other countries would have ended up producing that oil anyway. And so basically giving the green light for the Willow project didn't end up contributing that much to climate emissions because that oil was going to be made either by the US or by other countries. Some people were saying that we need to do it in order to decrease energy prices as a result of the war between Russia and Ukraine at the moment, which is definitely hiking up energy prices. And some people were saying that we shouldn't do it because it's bad for the environment. So a lot of moving parts here, but definitely interesting to see how this decision is going to end up affecting ConocoPhillips' earnings in the long run. And so right here we can see their income statements. It's a pretty impressive income statement. We can see they're comparing the results from 2020 to 2022. In 2020, they had revenues of $19 billion, up to $48 billion in 2021 and up to $82 billion in 2022. So that is a very large increase in their net revenues here. Also, if I scroll down here, we can see for their net income increased from $8 billion to $18.6 billion from 2021 to 2022. So that's more than 100% growth in net earnings for ConocoPhillips. So that is very impressive growth year over year. Then right here we can see their balance sheet. They had around $93.8 billion worth of assets in 2022, up from $90.6 billion in 2021. And their business is financed pretty much split down the middle between liabilities and equity. 45 billion of liabilities, 48 billion of equity, and of that, around $53 billion of that is retained earnings. And lastly, if I scroll down here to their cash flow statement, we can see year over year operating cash flow has increased from $4.8 billion to $16.9 billion to $28.3 billion. And they've been returning a lot of value back to shareholders, around $9.2 billion of repurchased common stock and $5.7 billion paid out in the way of dividends. So that comes out to be about $15 billion that was returned back to shareholders just in cash. And that's more than 50% of their operating cash flow for 2022. So a lot of value returned to ConocoPhillips. That's probably one of the reasons that's contributed to the fact that ConocoPhillips has outperformed the market over the last year now. And so right here, we can see this discounted cash flow model to figure out the intrinsic value per share for Conoco. Yahoo Finance is estimating that they're going to grow at around 9.49% for the next 5 years. I was conservative with my estimate and cut that in half to 4% for the next 5 years after that. They had $18 billion of free cash flow in their most recent full year and about $8 billion of debt on their balance sheet with a little over 1 billion shares outstanding. And that puts their intrinsic value per share at $217 per share with a 50% margin of safety of $108 per share, which means that at the current share price, they're trading at even a cheaper share price than a 50% margin of safety. So they're, according to these estimates right now, trading at a very good buying opportunity. Right here on the right-hand side, I compared them to some of their competitors, mainly Exxon and Chevron. We can see that in comparison, ConocoPhillips is pretty much beating out Exxon and Chevron across the board here. They have a better gross profit margin, better net profit margin, better return on assets, lower price to earnings ratio, and then unfortunately they also have the lowest dividend per share. Chevron has the highest at $5.68 per share. But in terms of everything pretty much besides the dividend, we can see ConocoPhillips is pretty much dominating their other two main competitors here in the energy industry. And lastly, I wanted to compare them to some of their competitors. We finally have another stock that, or not some of their competitors, but some of the companies that we've looked at in past videos. And we finally have another stock that is trading below intrinsic value per share here, ConocoPhillips, trading at 0.46 times their estimated intrinsic value of $217 per share. So that gives them the third place spot. GE, Albertsons, ConocoPhillips, and Google are the only companies on our list that are trading below intrinsic value per share here. In terms of growth rate, we saw that ConocoPhillips' growth rate was estimated to be 9.49%. So they didn't make it onto the growth rate table here. GE has the highest estimated growth rate at 44%. In terms of profitability, gross profitability was 37%. So they didn't make it onto the gross profit margin table here. But in terms of net profitability, 23%, they did come in 5th place behind Apple and ahead of Eli Lilly. And then lastly, in terms of stock performance over the last 5 years, they returned around 81%, not bad. They were able to make it onto the top 10 list for the last 20 or so companies we've looked at with their 81% return over the last 5 years. Tesla still holds the #1 spot at 733% over the last 5 years. So I don't know, comparing them to the other companies we've looked at, they're not really that impressive except for this table right here, share price to intrinsic value, where they're very impressive. They're doing a lot better than a lot of the companies we've looked at, and they are in fact trading below intrinsic value per share. And then in terms of comparing them to some of their competitors in the same industry, they're doing really well in terms of profit margin as well as in terms of price to earnings ratio, but they could be doing better in terms of dividends per share. So I'm not 100% sure what to make of ConocoPhillips right now. It seems like it could potentially be a good buy at the current share price, especially considering the fact that they're going to be producing a lot of oil over the last few years. Over the next few years, because of the fact that this Willow project has been given the green light. So let me know in the comment section down below what you guys think of Conoco. Is it a good buy at the current share price? Leave your thoughts and we could talk about it in the comments. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.